Hello, this is Lila, an algorithm investor and quant. If oil was the single industry that powered the engines of the 20th century, the backbone of the 20th century is undoubtedly the semiconductor industry. Just as oil fueled the Industrial Revolution, silicon chips are now fueling the digital revolution. We are currently in the midst of a massive structural semiconductor supercycle. This isn't just a standard market boom. It is a fundamental shift in how the global economy operates. Today, we're going to look deeply at 7 semiconductor stocks that are leading this industry. These are companies expected to deliver dominant results next year. And even if you don't own them yet, these are the ones you absolutely need to be watching to understand the future of the market. Semiconductor stocks have historically trended upward over the decades, but they were heavily tied to traditional economic cycles, boom and bust. However, the narrative changed completely in 2022. With the arrival of ChatGPT and the dawn of generative AI, spearheaded by NVIDIA's incredible rise, the market has witnessed a massive supercycle over the last 3 years. We are moving from a cycle driven by smartphones and PCs to one driven by artificial intelligence and data centers. If you held just one of these stocks, you would have almost certainly outperformed the market this year. Of course, the intensity of the gains varies from stock to stock. But if you had the patience to enter at a good timing, the returns have been fantastic. While NVIDIA's returns this specific year might look lower compared to some smaller players, we have to remember the explosive triple-digit growth it showed in 2023 and 2024. It is still maintaining a beautiful upward trend, proving it is not a bubble, but a new standard. However, the real breakout winners of this year look to be Micron Technology and Western Digital. They are leading the market right now with almost no shakeups, showing that the rally is broadening out beyond just AI processors into memory and storage. Of course, past performance doesn't guarantee future returns. The market is forward-looking. So, our job is not to chase what has already happened, but to put these stocks on our watch list and execute our buying strategy when the opportunity arises. We need to focus on companies with strong earnings potential and solid technical setups so we can grab them quickly when the timing is right. Now, let's dive into their weekly charts to see exactly where we stand. First up, the undisputed king of stocks, the king of AI, NVIDIA. When a bear market ends and turns into a bull market, one of the best strategies is to buy when the price breaks above the 200-day or 50-day moving average. These lines act as the dividing line between a long-term uptrend and a downtrend. NVIDIA broke its 200-day moving average decisively on May 13th at $129.93. Since that breakout, it has shown a return about 39.3%. Currently, it is consolidating sideways along the 50-day moving average. This sideways movement is actually very healthy. It allows the stock to digest its gains and build a base for the next leg up. As long as it holds this level, the AI thesis remains fully intact. Second is Broadcom. Often called the quiet giant of the semiconductor world, Broadcom actually broke its 200-day moving average earlier than NVIDIA, back on April 24th. Since then, it has delivered a massive 80% return. This tells us that smart investors, the smart money, recognize Broadcom's potential in custom silicon and networking early on and were already positioned. Currently, the price has dipped below the 50-day moving average. In technical analysis, this can be a warning sign in the short term. In this case, it looks like a good move to trim your position slightly to lock in profits while continuing to hold your long-term shares, as the fundamental demand for their technology is not going away. Third, let's look at Micron Technology. Micron is the key player in the memory sector. You cannot have fast AI without fast memory. Micron's true uptrend started in September, but the critical 200-day breakout actually happened back in June, Since then, it has shown a monstrous rise of 170%. This is driven by the insatiable demand for high-bandwidth memory, or HBM, which is essential for NVIDIA's GPUs. Within the memory sector, Micron sits at number 3 globally behind SK Hynix and Samsung, but it is the number 1 player in the US. Because supply continues to fall short of demand and earnings are expected to be dominant next year due to this shortage, this is a stock to keep holding. If you aren't in yet, don't chase the highs. Keep looking for buying opportunities on pullbacks. Fourth is AMD. AMD is the primary challenger to NVIDIA. AMD broke the 200-day moving average in mid-June and maintained a steady uptrend, though it is currently taking a breather. The market hates a monopoly, and big tech companies are desperate for a second source of chips, which benefits AMD significantly. Considering it's a large-cap stock, it rose significantly this year, so a rest period is natural. It looks like a buying opportunity will open up once it reclaims the upward trend along the 50-day moving average. Watch for volume to come in as it pivots back up. Fifth is Taiwan Semiconductor, or TSMC. This is the most important company in the world right now. It started its uptrend in May, similar to NVIDIA, and has continued to rise. Remember, almost all the chips we know and love, from Apple to NVIDIA to AMD, cannot be made without TSMC's foundries. They are the toll booth of the AI revolution. Therefore, the strategy of accumulating shares whenever an opportunity arises is very valid. It's currently consolidating near the 50-day moving average. This compression usually leads to expansion, so a momentum buy looks possible when it breaks out again. Sixth is Google. You might think of Google as software, but they are rapidly becoming a hardware powerhouse. The market is now recognizing Google as a competitor that can actually rival NVIDIA in chip design, especially after their massive investment in TPUs, tensor processing units. Google started its uptrend in June and has shown tremendous growth. Recently, it has pulled back near the 50-day moving average, essentially offering a buying opportunity for those who missed the first run. However, the price is currently quite far from the 200-day moving average, so patience is key. That said, for long-term investors who believe in vertical integration, Google looks attractive at any time. Finally, Western Digital. This stock represents the data storage side of the equation. Since breaking the 200-day line on May 13th, it has shown truly surprising performance, likely the highest returns among most semiconductor stocks recently. As AI generates more data, that data needs to be stored, driving up the price of NAND flash and storage solutions. Because the gap between the current price and the 200-day moving average is very wide right now, it represents a high-risk entry for new buyers. It's not the best time for a new entry. But if you already own it, it looks like a stock you can hold on to with a big smile on your face, letting the profits run. Today, we looked at 7 semiconductor stocks that you should either be holding or have on your watch list. The key takeaway is not just the names, but the timing. For the stocks that are currently overextended, meaning there is a large gap from their 200-day moving average, it is better to wait for the price to come to you. However, many of these are forming specific chart patterns right now that signal continuation. We are in a historic era. Keep a close eye on these stocks, stay disciplined with your entry points, and ride the semiconductor supercycle driven by AI. This is how you continue to build generational wealth. If you enjoyed my perspective today, please hit the like and subscribe buttons. This has been your Cycle Detective, Lila. Thank you.